reverse engineer what the biggest winners ever look like. Go back and just study all the biggest winners of ever. One thing you're going to find is a lot of new highs along the way, right? Mathematically, a ton of them, like more than anything else, you're going to see that. So if you look for that sort of behavior, you're going to be in the universe of stocks that have the potential to be in the biggest winners ever. And it doesn't mean that you have to hold it forever. There are trades along the way.
This episode is brought to you by my friends at FinChat.io. FinChat is the complete stock research platform for fundamental investors. Beyond having all the standard financial data for more than 100,000 companies around the globe, FinChat tracks company-specific segments and KPIs on over 1,500 stocks. You want to see Amazon AWS's revenue over the last 10 years? FinChat's got it. You want to track premium subscribers for Spotify? They've got that too. You want to see how many stores Lululemon added in China the last quarter? Yes, FinChat has it. FinChat has everything you need to easily track and manage your portfolio. And starting today, you automatically get 2 weeks free of FinChat Pro when you sign up. So go to FinChat.io. That's FinChat.io and try it out. If you end up loving the platform like I do, you can use code TWF at checkout and get 15% off any paid plans. Hey, everybody. Trends with Friends. I am Howard Linson. I am joined by, as always, by our host and what do you call it when someone runs the show? Our showrunner, I don't know what you call it again, Phil Pearlman, who...
The man. That's what you call it.
The legend that is.
The legend.
I was saying before the show, some parents save their kids blankie. Phil saved his kids extra small T-shirts, and he wears them once in a while to flex. That's a flex. He squeezed himself into a tank top next week, I hope. No
shirt Phil, next week, baby. I'm going to get a big tattoo right here. It's just like
with hair. Just with hair.
Just my hairy chest.
And then obviously, so Phil Pearlman and JC, who looks great, is wearing suction cups or vinyls. He's wearing record. What is that on your shirt?
You're the old guy. You tell me, what are these things?
CD-ROM?
My grandfather used to tell me about these things, Linson.
Pizza? I have nothing but pizza on my mind. I tell you, I've had a couple of good pizzas here. I'm in Tuscany.
You're drinking good Sangiovese, I
and
bet?
fava beans.
How's that Sangiovese? You drinking a lot of that or what?
You can go to like a truck stop, as everybody knows, and get pasta that's better than California. So
I like how Linson's going to truck stops while he's in Tuscany. That's good.
Listen, when you're biking, you pull into truck stops. You just don't go to the bathroom, just like in the United States. Just be in the bushes. All right, we've lost the script very early in the show, and back for special guest Riley Rosebee, who's in Sedona, where everybody wants to be. Riley has joined me and really started a great newsletter called Price and Popularity. We recently changed the name to Trends with No Friends, which is we're going to start with that because Trends with No Friends is soaring in popularity with our readers and market enthusiasts, because the whole essence of Trends with Friends and Trends with No Friends, JC and Phil, as you know, we like to find trends. We don't need to be first, but we like to find trends that kind of are unloved or unnoticed that happen to be working. You know, price works, the people follow later. And then just as importantly with Riley, we like to avoid, more importantly sometimes for people's portfolios, is staying out of broken trends with too many friends. So that's going to be a segment that we do weekly. For ourselves, obviously, and it's just been such a great list over the years that we're starting to share publicly. So, Riley, first, let's start. What's a trend that you've noticed with very few friends?
Let's first pull up TGS if we could. I'm definitely going to butcher the name of this.
I would say less than 1% of people know what TGS is, including me.
Transportadora de Gas.
It's Argentinian. It's an integrated Argentinian oil and gas.
You know what? I get a little
Natural
of this
gas.
when I have
JC. Why don't you read the name of this company?
Please help us with the
gringos.
exactly.
Transportadora. So it's Transportadora de Gas del Sur. So that means transportation of gas in the South would be the translation.
By the way,
that's beautiful because it's so
surprisingly. I had a little prosciutto and cappuccino, and I got a little de Gas del Sur as well last night. And it didn't sound as good as you just saying that. And so you can see our new logo, Trends with No Friends. All right, so this is interesting. 500 followers. So people love talking about Tesla, GameStop, Apple, even gold right now, and Bitcoin, of course. But Transportadora de Gas del Sur is probably Argentinian, maybe Latin.
Argentinian, yeah.
Argentinian.
So go ahead, Riley. Tell us about this. It's got 500 followers on all of StockTwits.
500 followers on all of StockTwits. It is the largest natural gas transporter in Latin America. Argentina has really taken off since the presidential election occurred. The Argentine.
So they got that crazy guy. Is that what's going on?
Crazy guy, crazy hair.
He's got good hair.
The stock market likes it. The ARGT, which is the Argentina country ETF, is up like 36%, 35% since he was elected.
It's a lot of Mercado Libre there.
Mm-hmm. And meanwhile, TGS is up like 70%.
And that's in U.S. dollars. So it's rising in U.S. dollars, not just Argentina.
Correct.
Yep.
And what's
this guy?
Is this all-time highs? Is this all-time highs, Riley?
Just below it, I believe. Let me zoom out.
Okay. So there you go. These are the trends we like. It's obviously commodity. We've been talking about XLE here in the U.S. I tell you what, natural gas is the one commodity that sucks ass or has sucked ass compared to other commodities.
Yeah, but this thing doesn't trade with natural gas, Howard.
Obviously. Yeah, obviously.
Yeah,
Why,
yeah.
JC?
For the audience, like natural gas might suck, but this is trading with the energy, oil and gas in general. And Argentina, for that matter, to Riley's point, right?
Yeah.
Yeah, money
Beautiful.
flows. So Riley, this again, like, that doesn't mean to go pile in here, but this is just an example of strong price momentum. There's obviously we're not going to get into the fundamentals today because that's not what we do on a week-to-week basis. But these are the type of stocks you'll find on our Trends with No Friends list, right? High relative price strength. They generally start showing up. This has been showing up in commodities for months and months and months, and now spreading. And obviously, like you said, Argentina, the market's been just so strong, whether you like it or not, with the new president. And so there's all kinds of underlying global macroeconomic fear and greed things happening. And the extra flavor that we like to throw here that Riley's putting together is no one cares, which are generally the best trends. Eventually people will care. Now, different than a tech stock with, 90% margins and compounding growth and network effects, you got to be, these don't work the same way. So they're, commodity-based, trend-based, historical-based, contextual stuff that happens here, but that doesn't mean these things can't go on for, a couple of years. All right. And the opposite side of the spectrum, Riley, what do we got?
We have GameStop.
Yeah, this is a poster child for, this has been going on for a while, but this is, and Riley will walk into it. One of the things that is just as important at finding winners is avoiding portfolio wreckers. And obviously this made a lot of people, or a few people, a lot of money back during the Robinhood game, just during that whole Wall Street bets. We're stuck at home with COVID, short squeeze, CNBC. It was all fun and games. Everybody started following it. And what happens when these trends end is no one can sell, right? They continue to talk about it and everybody gets stuck. Phil, this bag holder dilemma. Is there something you can explain here psychologically?
There's a behavioral, this is a classic thing, is that people sell their winners too quickly and they hold their losers too long. And this is an extension of prospect theory. The great Daniel Kahneman, who just passed away, won the Nobel Prize in Economics, and his partner Amos Tversky prospect theory is this idea that we're loss averse, losses loom larger than gains. And one of the extensions of that in the stock market specifically is that people sell their winner. They get really excited. They sell their winners too soon and they hold their losers too long. So you see Gamestop, it was a meme stock extraordinaire. This has been how long ago already, Riley? 2-3 years ago was this meme stock
it peaked in January 2021.
So it's been 3 years, 3+ years, and this thing still has over 250,000 followers on StockTwits. There's so many bag holders, so many people riding it lower. They are avoiding loss realization. They're avoiding taking their losses and realizing their losses.
It's the 19th most followed stock on StockTwits.
Wow.
Now remember, that doesn't have to be current. A lot of people could have abandoned this. But again, when people set up watch lists, there's a lot of signal both in what they're not following and what they are following. And this isn't just StockTwits. This is every financial site, Robinhood, E-Trade,
Look at it compared
Schwab.
to AMC in the next chart. Look at that.
Okay, AMC.
Oof.
They're the same fucking things. Ooh, AMC, but wow.
AMC's
what
even worse.
Isn't that great?
Well, because the CEO has just been a clown car. But there you go. AMC probably has hundreds of thousands of followers too. It was the ape stock. And again, all fun and games. But you've got to avoid these downtrends with too many followers because this becomes a cult. And what happens is people make up excuses for owning something, thinking that there's this crowd that's with them cheering them on. Phil, that just goes to that behavioral theory.
Hope is the thing with 2 lead feet.
Hope is the thing with
there was
2
a poem
lead feet.
that went, hope is the thing with wings, Emily Dickinson. But I'm saying hope is the thing with 2 lead feet.
All right. So, Riley, you're doing this every day for us, Trends with No Friends.
Sunday through Thursday.
Sunday through Thursday. It's a magnificent list. You don't have to go buy something or sell something right away. The idea is to look at this list and get a feel for the fear and greed, for the animal spirits. Phil, what would you add to that?
It's a work in progress. Like I was just thinking about like something we can improve. To your point that you made before is that we should be looking more closely at how many people are leaving, unfollowing, how many new people are following, and just getting more granular with that data over time. But the major construct of this, the basic concept is so brilliant. Stocks that are doing well that nobody's paying attention to, and stocks that are sucking that everybody's already in. Just it's such a great thing, and it's so
I like it from
the
long side better.
Yeah.
Selfishly,
Me too.
They're both really interesting, but the beauty of the long side is that the market is literally pricing in positive behavior. It's just math. You see it doing well. And then you could see that nobody cares yet, right? That's the beauty of it. You're quantifying the animal spirits becoming aware. Like you're reverse engineering what a great trend looks like. The end of that is exuberance, irrationally. But you have to get there. So you reverse engineer the process of getting to that irrational exuberance. There's a step there where the spikes, the follows spike in a particular stock in StockTwits. There's a sequence of events, and that is along the way far from irrational exuberance. So you're literally quantifying one of the earlier steps of that entire process, right? The whole cycle.
I mean, we're just piggybacking on Peter Lynch's idea of following stocks with no sell-side analysts back in the 80s. But as you know, the sell-side analyst industry is kind of gone by the wayside. So,
because you know why? Because companies that don't need sell-side analysts, they don't need your bond market, they don't need to issue secondaries, they don't need you. So the Wall Street's not going to cover them. But that's a good thing for the stock, especially if it's making new highs. This is like a better way to do that because through Wall Street, there are conflicts of interest that impact those decision-making that in StockTwits is just pure crazy humans.
Right.
Like it's just
it's
emotional humans, right?
Pure crazy humans.
Pure crazy humans is a great name for a fucking band. By the way, with that shirt,
pure crazy humans.
Pure crazy humans. It would be a great hummus. It would be a great flavor for hummus, and a great name of a band. And maybe a great name for a fucking website. Okay, so more importantly, to Phil's point, just last thing on Phil, you take over for the rest of the show, is you can get too granular, right? Like there's this fascination with, okay, we've got some signal, let's go deeper. These are rabbit holes that you don't need to go down, right? The idea of the market, if you're not going to index, is to find a couple times a year or a couple ideas a year that give you outperformance, right? You can what's most important to me is kind of shadow indexing, right? Where you could be with the QQQs or the SPY or like a mix of things and really keep your costs down 98% of the time. And then there's a couple times when there's just these fat pitches where things that we talk about really align, right? When no one's thinking about them, but everything's teed up in your favor. And you can really outperform the markets just varying from the 99% one or two times a year if you get things aligned. So you can get too granular with this stuff and say, we want to go deeper. So the idea is to follow these lists like this that we've created for you for free. And don't get too granular, right? Like not every idea is a great one, but sometimes the stars align. All right, Phil.
And just a way of thinking. Hey, Riley, what's the URL for the newsletter?
How do people find it? nofriends.beehiiv.com.
And that's Beehive is BEEHIIV.com. Not.
Yeah, I'm sure we'll link it in the show.
Okay, perfect. Now the weather's beautiful in Sedona, so you're not hanging around for the
I'm
rest
gonna
of
go
the
play
show.
some golf.
I don't blame you one bit.
See you, boys.
Nice.
Go
have fun.
Good job.
Okay, so let's move on. So here's where I want to go next. So the theme that's emerging from this program is the best of times, the worst of times, right? We just showed you two stocks. One is behaving incredibly well. One is behaving incredibly poorly. So now I'd like to continue with that theme, but move on to the Mag 7 and best of times, worst of times, and talk about a winner. JC, take a victory lap here. Here's a Mag 7 stock that has perennially been one of the greatest performing stocks, maybe of all time, that is rolling over. JC was all over it. Apple stock. Show us the chart and talk to us about it, JC.
Yeah, no, I appreciate the shout. Look at Apple. I mean, the underperformance has been here for a while. And what are the things we talk about? We talk about relative strength all the time. We talk about rotation these days into energy and commodities. You're seeing relative strength. What we've seen in Apple has been the exact opposite. It's been relative rotation out of it. Not only Apple not going up with the rest of the market, but actually going in the opposite direction. I mean, it couldn't be further from relative strength, and the same thing applies. So I don't want to say it was an easy short, but when everything's doing well, or a lot of things are doing well, you want to notice the ones that are not. When things are doing poorly and the market's under pressure, take a look at the ones that are not under pressure, the ones holding up the best, right? So you want to play both sides, and Apple has just been a standout loser in an otherwise relatively healthy tape. And so, if we're going to look for short positions, Lululemon was another good one that got clobbered. Apple's been a fantastic one. So there have been shorts working in this environment. And my suspicion is there's going to be more shorts working in this environment. So we continue to look for more losers. They're out there.
All right. So next week, I'm gonna ask you for a new one. Howard, let me ask you this question about Apple. Are there mumblings yet about Cook's head?
I mean, there's always mumblings. I mean, the company is bigger than, is a big, maybe one or two. I guess Microsoft's bigger, but let's be honest. Like, there's been people have hated Apple the whole way up. It's had so many big corrections, and in the last 3-4 years, it was just very few corrections. So again, 99% of America owns this because they own the S&P, Vanguard, the retirement account. I think a few months ago, JC got overall, a lot of it was just election cycle, but JC was pointing this out. I feel, listen, it's the law of large numbers. Tim Cook's been hated since Steve Jobs passed away. Nothing changes here. We had Michael on. The goggles are a flop. We all know that. So
the goggles are zero. That's it. we've decided.
Well, I don't know. They're a flop. I mean, they're not going to give up, but they did give up on the car after 10 years quietly. So I'm saying, they're not stupid. A flop is a flop. Apple's not going away.
Was the watch a flop or was that a success?
Well, again, good point. It's a success relative to what I thought it could be. Like, people buy them and it's sold more watches than all of Swiss have ever sold. No, I'm seriously, like, it's bigger than the whole Swiss industry. But is that a big enough success to move a $3 trillion company? Let's be honest, it's a planet, and moving a planet is not going to be easy. So the question is, what's the overall drag, like JC says, on the S&P? Not so much should you sell Apple, right? I don't know, right? Like I got the headphones on. We're relying on iOS. So again, it's a planet. I think what's more important, Phil, is what's working in the fangs, and that's Google, right? Everybody was bitching that it was woke. Google and Meta and NVIDIA are carrying the Magnificent Seven, and it's a market of stocks, right? That's what, Trends with Friends is, we like to talk about individual ideas, and, it's
so
Google
the worst
and
of
Meta.
times, the best of times, and Apple is the worst of times in the Mag 7, and Google, and I think JC has a Google chart too. Google is the best of times in the Mag 7. And they just came out with some announcement today about, I don't know, some new ARM chip and their AI. I don't understand any of it, to be honest with you. But it looks real good here, and the market's down. And it's making an all-time new high. JC, what are we looking at here on the chart?
Yeah, for me, it's a no-go. I got to see it. At my old age, Phil, I have learned that I'd rather pay more for the good things in life. And that could be Wagyu or sushi or paying a premium to see a breakout in a stock. I know that I'll pay more. I'm okay with that because I'd rather sleep at night knowing that I'm not long something below overhead supply. You know what I mean, Perlman? You taught me sleeping is very important. Get your rest. I'd rather pay more knowing we're above, kind of like Bitcoin now. I got to see it. I'll pay more. I'm happy with that. I'll be the old man that will be patient and just wait. I'm not convinced yet. I got to see it. And I'll pay more and I'm okay.
And so you're saying Google is above this all-time high, but not by enough. Like
it's
this is
shaky.
not like not a lot of gusto here.
It's a little too shaky for me, Phil. I got a few more gray hairs here. You know why? Because I got those because I was buying shit like this. That's why.
All right, point well taken.
I think I'm the opposite here. I'm not saying buy more here. I'm long, but this goes to trends with no friends, right? They're too woke. They're overhired. The CEO's not doing a good job, Sundar. They pay people too much. There's too many employees. They're way behind in AI. I've never heard anything positive in the last year. And then you look at how it's trading versus Tesla, and Elon. No one can hurt the guy. Like, no matter how much he implodes himself, people love the guy. And Google stated. So just on sentiment alone with price action, I think Google goes higher, but that's just an opinion. So it is best of time, worst of times. What else, Phil?
I love Google here. I'm not an individual stock owner. I own a couple here and there, but I like the Google. And I do think from a sentiment point of view, everybody was way too negative on them around the AI, and admittedly their poor woke opening foray with Gemini, but I think they're going to correct that. Okay, so I have a philosophical question for you guys now, and this I think goes to what we're talking about, especially with this is the best of times. When you look at a stock like that gas stock that Riley was showing us with can't even remember the name of it now, that has no followers.
Transportadora de Gas del Sud.
There you go. Beautiful. I'll forget again tomorrow. Here's my question for you guys. Why are all-time highs so awesome? Why are they good? Why do they continue to go up? Why do you look for them? Why do you buy them?
It's just math. So do the same thing
Go
we
ahead.
did before.
Okay, talk to me.
So reverse engineer what the biggest winners ever look like. Go back and just study all the biggest winners of ever. One thing you're going to find is a lot of new highs along the way, right? Mathematically, a ton of them, like more than anything else, you're going to see that. So if you look for that sort of behavior, you're going to be in the universe of stocks that have the potential to be in the biggest winners ever. And it doesn't mean that you have to hold it forever. There are trades along the way, right? So that's why I look at it.
Yeah, for me, philosophically, it's just hard. People just, like, I don't know, what we call them before, the name of our band? They're just, they're not stupid, but they just make mistakes.
Pure crazy
and they
people.
sell their winners. Yeah. And it's just very hard for people to grasp math, right? Like, I hear kids today are having to memorize times tables. I can't explain that. Like, that was something that we learned very early. It was a muscle like yoga that we had to learn times tables. But now, and it became, we could count. You know, I can't blame the kids, because at the same time, if you took, because kids can't do maps, right? Like, without maps and right turn, left turn, kids don't know street names anymore. So you stop teaching something, or something stops getting used, and people just move on with their workflows. And in the public markets, historically, like JC says, the math of, you know, markets go up, the stocks are at all-time highs. Now, the bears will say it doesn't work for the few times, you know, every cycle where markets peak. Obviously, markets peak and stocks have been at all-time highs when they peak at many points in life. And that's where just adult behavior, money management, taking responsibility for making decisions matters. But give me stocks at all-time highs over stocks at all-time lows all the time. So we'll give it to math on this one with JC.
The reason that I'm asking this is because this is an undercurrent of this program, almost every show, that you have really strong stocks and people think they can't keep going up, and they keep going up. And Howie, you've been talking about this forever, since I've known you, going back 20 years. You know, find the trends, ride them, jump off, have fun, or whatever your saying is. And with JC, he just does this like a mechanic. Like, this is just math for him. This is just data for him. This is just, he draws a line. This is where his risk management is. And it's very cold. It's very simple. With you, it's very warm. It's very human. I love the combination. I just wanted to revisit that.
Well, for me, Phil, sorry, it's storytelling, right? JC's math. I love math because I learned math, and math works, and I believe in math. Because eyes, ears, feet, like, it's all math. But at the same time, the greatest companies are led by storytellers, right? It's not just profit and earnings, it's storytellers. And I'm a human, so I tell stories and try and find catalysts for why this is happening, to make reason of the math. And some people are better storytellers than others. So you have to have a little bit of both. But in the end, math generally wins, if not always. And but companies
Howard,
are led by storytellers.
You of all people prove time and time again that the math is leading to the story. You're going to go and you're going to see a stock on the new 52-week highs list, because you love hanging out on the new highs list, as you should. And then you hang out on the StockTwits least loves list, and you're like, okay, what are you doing there? The math is giving you the story. And then you're like, oh shit, this company makes watches in Switzerland or owns auto dealerships in Texas. Like, and then you're like, oh, that's an interesting story. But the math got you there, Howard.
Math gets me there. But I'm saying you can, in the stock market, as we're seeing with crypto and tokens, storytellers can make a lot of money. The math eventually, this is where we have to tell people about, like, the Gamestop. Eventually the math matters, and stories can be first in the stock market. When you have this many people onboarded, and this is what we're trying to also teach people, is be careful it's not about information overload, it's about filter failure. So be wary of story-led ideas, because eventually the math matters, as it happened with GameStop and AMC.
Right? It's filter failure.
Beautiful.
Yeah, no such thing as information overload, only filter failure.
That's great.
The first time I heard it was J.P. Ragheswani, who's one of the great data people and minds of our time. He lives in London. He was head of data at Salesforce. He worked at British Telecom, blah, 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 head of Dresdner Bank. He heard it. I forget who, maybe it had been Chris Anderson from the Long Tail. I mean, you can't, this is a 10-year-old quote that was probably worked 100 years ago that never has meant more than it does today. Because information is not going to slow down, and filters become more and more important. Hence, trends with no friends, hence these stories. But if you buy stories, eventually the math matters. If you buy math, you can form stories to keep to make you warm and fuzzy and help you, ride the math. And that's basically, that's our last show. We've told everybody everything we know.
I've got
All right, Phil,
Roman.
That's it, everybody. Thank you very much. Okay, so speaking of that, what are your best stories this week, JC? You got some all-time highs. My favorite chart, by the way, is this gold one you got in all these different currencies.
Yeah, this speaks so eloquently to exactly what we're talking about here is let the math tell you the story, right? People like to figure out the story, which is perfectly normal. Roman can tell you all day how human beings are storytellers. That's how we got here. We have the ability and the natural desire to be told stories. Like, that's perfectly natural. It would be unnatural to not want to have those desires. So it's important to us as investors to overcome those. And rather than start with the story and then go to the price, start with what's actually happening and let that become the story for us. And in this case, it's gold making new all-time highs, which is no secret. It's obviously. But here's the next one. And this is the story. The story is gold has already, and we've talked about it on the show, has already been making new all-time highs priced in all the other currencies, right? So the story is what's actually happening. And what's actually happening is that all of these currencies all over the world, Swiss franc more recently, have broken down. Every single one continues to lose value relative to the price of gold. The dollar has now finally succumbed to that selling that we've already been seeing in all of these other foreign currencies. That's not anything new. Now we're seeing it in the dollar also, but it was really inevitable, right? It was really like that last domino to fall, like that last currency that hasn't broken down relative to gold. So now the dollar's just, part of the rest of the world, right? It's perfectly normal. All of these currencies continue to lose value. And this chart tells that story better than any human ever could.
Okay, well, this is why living in America can sometimes blind you to great trends. Can we go back to the other one? I'll explain another story that people like to tell themselves, the gold and U.S. dollar one, because I obviously got this wrong. Think about 2020, March 2020, end of the world. Like, I thought, Batnick thought, anybody with half a brain, you 1 + 1 = 5, that, the world's coming to an end, gold's going to break out. There was a 3.5, 4 year period where it tried. This is in US dollars. If you've been doing the maths and checked other currencies, you would have stayed long gold. But it knocked on the door 4 times in US dollar terms, when it seemed so obvious in March 2020 or June 2020, after the money printing in green burr, whatever, money printer go burr, and all these things, and bad government, and the Russians, and Trump and Biden and blah blah blah, and here we are finally, when everybody's worn out from looking at this chart for 4 years, saying it's all about Bitcoin, it's all gold is over. And now when no one wants to talk about gold, because they want to talk about Bitcoin and shitcoins and Trump and the Bible.
We'll go to the next one. Go to the next chart, actually, because that one.
Here it finally is going to really probably run. And I'm long. I mean, I am long GLD. I should have been long in other currencies, but I don't know how to fucking do that because I'm busy. But okay, what does this say, JC?
So this is fake internet money priced in gold. So as opposed to priced in dollars, this is priced in gold.
Fake internet money priced in gold. No one has said that on the internet until today. So fake internet money.
So understand something, means. Howard.
It's so funny.
Before we met, actually when we met, I was a gold bug, right? I was in the 2000s, I was a gold bug because it was cool being a gold bug. We priced everything in gold. Like, that is the denominator. And you guys know me. I've always done that. So in the world we live in today, in the meme world, the fake internet, I'm still a TradFi bro. Like, I am a TradFi bro by default, right? Now, I've obviously been orange pilled and I'm a degen and all that stuff. Great. But I'm a TradFi bro OG. Like, I'm native TradFi versus being a native degen. So for me, I can't help but put things in perspective of the $1 trillion in Bitcoin versus the $16 trillion in gold, which we're pretty much hitting as we speak. So, let's put things in perspective. So I think just like we price every asset in gold, the stock market, the bond market, we price everything in gold, we should do the same thing with fake internet money. Like, of course, why wouldn't we?
So it hasn't broken out.
So what are we seeing? So tell me what we're seeing here, JC.
Right.
Because I'm an idiot.
I think it's the same story. Bitcoin and Ethereum and Binance, all of these are back to their former cycle highs. Now let's see the breakout. Like, I got to see it, right? That gets back to that conversation we were having before of I'm the conservative old man in the room that rather pay more, a premium, knowing that we're on the way up, that we've already broken out. This is just the same story told a different way, through a different perspective, through a different lens. We're still below the prior cycle's highs. Let's see it. The people in gold in 2020, when we finally got back to those 2011 highs, I said it myself. I'm like, hey, we're here. Let's see how long it takes to digest. Might take a few weeks, might take a few months, might even take a few quarters. I said it just like that. As it turns out, it took a few years, right? So I don't know how long it's going to take. And I'd rather pay more knowing it's happening rather than trying to front run that, because opportunity cost is a motherfucker.
So there's a couple stories here to go with the data, which I love. Number one, what you said before about gold breaking out in all of these other currencies and not breaking out in the US dollar. And now it's finally doing that. And is that really part of that story? Is the inflation story that you were talking about last week, JC?
I mean, I think so. You see interest rates going up. You see all of these currencies breaking down relative to gold. You have commodities in general, energy outperforming all year long. Like, there's really been that massive rotation. Everybody keeps telling me that interest rates are going down. I see the US 10-year yield and 30-year yield at the highest level since November. And it's not just the long end of the curve. Look at ones and twos, also highest level since Thanksgiving. So people are talking about lower rates. I'm seeing the exact opposite. And the commodities market is speaking to that. It's not a gold thing. It's not a metals thing. It's not an energies thing. It's a commodities thing. And what these commodities are being denominated in continues to fail. The dollar more recently, but others for a long time. The Swissy more recently also. But this
and
is
then parallel to that, the way you were sort of waiting for gold and the US dollar to go. Are you waiting for Bitcoin in gold to go?
It's not like it's a trigger like, oh, it has to break out in gold for it to count. Like, at the end of the day, I'm trading it in dollars, but it would be further validation of that trend resolving higher. No question, I think. Yeah, sure.
Yeah. Phil, I'll go with, I don't care about Bitcoin relative to what's going on today, but I mean, it's fascinating. I would say I'm trying to put a story together about what I see in the math. And, I've come up with gold, Goldman, the 3 Gs, right? Gold, Goldman, and Google, right? The math says they're working. They happen to be 3 Gs. The QQQs are stalling because of Apple, but I'm looking for a story. In a high interest rate environment, Google makes less hardware. Google is less reliant on China. They don't have business in China, right? So in a world where, and everybody hates Google relative to Microsoft and OpenAI. So there's something going on there that, like, even in rising interest rate, Google's leading, and it's a very simple business, even though it's more inclined to risk because they're relying on ads. Then you've got Goldman Sachs. Isn't it supposed to be dead with fake money and no SEC rules, and aren't they criminals? But in an era of Trump selling Bibles and 90-year-old presidents, maybe it's never been easier to be a thief. And Goldman's, sneaking around at all-time highs with rates in their favor, right? And unlike that asshole, and I know everybody loves him, but the guy who runs JP Morgan, who's on TV every day from Davos, the Goldman guys quietly DJing and ignored. And so you've got Goldman, you've got gold, you've got Google, a little bit of everything. The market's working. It's not perfect. There's ideas to get short. There's too much love and cult for many different things, from Trump to AMC to SoFi to poorly run non-earnings based businesses. And then there's gold. So the triple G's over the triple Q's could be a trend here, which is not good or bad. It's just something I see. So, that's
so
my idea.
Speaking of
that
Goldman and speaking of Goldman and speaking more generally the banks, Friday, so this will come out. We're taping this on Tuesday. It'll come out on Thursday. And the banks begin reporting. There's no rest for the weary. The banks begin reporting on Friday. You get JP Morgan, Citi, Wells, State Street, BlackRock. JC, any thoughts on the banks here as we approach Friday, which is kind of this kickoff of the financials reporting season?
Yeah, financials, are still flirting with those former cycle highs. So I look at it the same way. I need to see it. So in a similar way that Bitcoin is back to those former highs, Google and Amazon are back to those former highs, the XLF Financials Index back to those former highs, regional banks still suck. So it's not that has a direct impact on the larger banks. The larger banks have actually done great, particularly the European banks. I'm in a let's see it mode for a lot of things, and I still haven't seen it. So let's see it. It was an impressive run on the way here. I mean, the ongoing joke with the banks at my firm in October and November was that we weren't long enough. We don't own enough banks. That was just a joke, funny, but not joking, serious. That was the case in October and November. We're now in April. Financials have had a monster run. So for me to initiate new positions from the long side in financials up here doesn't make a lot of sense, especially as we're running into the former cycle highs. That's not what I do.
I'm with JC here. I'm just trying to tell the story. You look at these three charts that JC put together for us. They tell a beautiful story but we're not finished yet. If we look back in a year, I can see gold being the only one above these prices and the other two flipping over. So I'm with JC. I'm long. Yes, I'm long the Qs. I'm long Google. I'm long gold. I'm long. I'm just not super long anything. I'm not adding, but it wouldn't shock me if all three were much higher. All three of them were much higher, because these are not flaky little businesses. These are businesses that everybody needs, no matter who's fucking president and no matter what's happening in the Ukraine. And they're showing that they're busting through at a time when the headlines say things shouldn't be working. So that's the story.
Okay. So 3 Qs.
3 Gs.
Is now 3 Gs. And any thoughts about Jamie Dimon's comments the other day? He always, he comes out, he can move markets, and he always has something. He had something big to say about AI, but he also had concerns about the global macro environment. I don't know.
I'd love to hear your thoughts, Howard, as somebody who talks to a lot of founders and CEOs and, understands the way the real world works. Jamie Dimon has a responsibility to his shareholders. His job is to increase shareholder value, period, right? So it's not his job to help mom and pop investors. It's not his job to tell people what they should do. It's not even his job to tell people what he thinks the market's going to do. It doesn't fucking matter what he thinks, right? So by the way, I think JP Dimon's great. He's the fucking man. He's the CEO of JP Morgan. So this isn't a knock on JP Morgan, but as an investor, why on earth would we care what Jamie Dimon thinks about the market and interest rates, or how will that have any impact on what we do when we don't even know if he's telling us the truth? Because he doesn't have to. It's not his job. His job is to increase shareholder value, which, by the way, I don't know if you noticed, he's been doing a hell of a job. So God bless him. So people are like, oh, but he's wrong a lot on his predictions. He has one prediction: line go up. If line go up, he's right. That's the only thing that matters. Nothing else he says matters. So as an investor, that's how I look at it. Am I crazy? Or
No, on TV, he's a storyteller. He's probably screaming at his staff about profits when he hangs up from telling stories on CNBC and on Bloomberg. He's a storyteller. He's a master storyteller. You assume none of what he says is true, but yet most of what he says is true, meaning he has data too. He doesn't want to lie all the time. And when he's talking about interest rates, as much as I hate to agree, he's right. Rates are going higher.
He's going to say things that are going to improve the position his company is in a way that improves his company. That's his job. Like Phil Roman has other objectives. Linzen has other objectives. JC has different objectives. I think it's important to understand the perspective in which that person comes from. No, Pearls?
Every single person on TV, every guest that's brought on by CNBC or Fox Business or Bloomberg is talking their book. It's just reality. It's not a bad thing. It's not evil. It's not a good thing. It's not friendly. It's just what is.
They're not talking about math, though, and they're not talking about probabilities. They're always talking in surety, and that's what makes it fake. Is that they're lying, because they could just honestly say the math says this is the odds that this is, like interest rates. He's making an odds-based decision that rates are going higher. I'm with him on that. He's lying about why he thinks so. He's giving us certainty of why it's happening. But at the same time, it seems to me, based on what I see, is rates are going higher. And the super rich love that. If a super rich person can earn 6-7%, bring it on without taking risk. That is a dangerous place for the world to be. That's what worries me, is that as someone who's wealthy, if I can earn 5 to 8% from my bank that is backed by the U.S. government, more people will start doing that as rates go higher, and that leads to problems. So within his story are other stories that will unfold. But yeah, I mean, why?
Now, with that said, let's keep in mind that as in that environment where rates have been where they are, the decision has continued to be to buy those bonds because the opportunity cost that has presented. So while in theory, that 5%, 6% or 4% or whatever people are getting is advantageous, and it's been a mistake every single time so far, because you could have owned anything else, Bitcoin, stocks, gold, anything but fixed income, and you would have made significantly more money. So getting back to the human emotion of it, Perlman, this is right up your alley. What if it's obvious, it's obviously wrong. That has been that, no?
I think he's just talking his book. I think everybody that goes on one of those programs, especially the bigger the stick that he has, he's Jamie Dimon. I think I think what you said at the very beginning of this conversation, he's just going up there. He has a motivation that's very different than mom and pop.
Yeah.
Any investor out there listening and taking at face value anything that any of these guys ever say is the mistake, that's your mistake. You know what I mean? Like if you're doing if you're sitting there writing down what he's saying, taking it as gospel, then that's your mistake, because he's
hang on.
goosing his stock under any circumstance.
That's it.
No. This is why we have a degenerate economy. They don't care. They will YOLO no matter what the interest rates are. I worry about that, JC. You asked me what I think as a CEO. I'm not super rich, but I'm wealthy enough that I don't care if I'm earning 5% guaranteed while I travel and bike and not have to watch the market or take risk. Yes, I'm underperforming because it's obvious, but it's also very good because I have capital and I don't need to compete against the S&P. And if enough people pull their money out of engagement, out of the battle that is startups and venture capital and capitalism to take their 5 or 8%, it's long-term not good. And that's when you get empty countries and villas and people not investing and stuff going wrong. So again, you got to factor all this stuff in, but that's very high level and not important for, a serious conversation at this moment. All right, Phil, keep it going.
Okay. So the Donald Trump stock, we just have to talk about it. I was doing a little bit of back study on it, and I noticed that StockTwits has more than twice the traffic than DJT or Truth Social, whatever it is. So monthly average users, StockTwits has more than double of what, more than double. And the concept that this idea that an ex-president could be involved in a pump and dump is just mind-boggling to me. But we're sitting here looking at the chart.
Yeah, but it's not a pump and dump. It's not a pump and dump.
Well, if you look, didn't it come public in March?
But there's no dumping.
Spiked up.
It's a meme coin. It's not. There's no holder that can dump to it's right. You know what I mean? It's not a pump and dump.
Well, it went from 66. It closed at 66.
It's a publicly traded meme coin.
Over 70.
Yeah, but it's a publicly traded meme coin.
And now it's trading at 36. So it went down $30.
Right, because that's what meme coins do.
It got cut 50%. Like if you bought on the way up when it came out, it went from 30 to 40 to 50 to 60 to 70. And now it's in the 30s again.
No, I know, but
that looks like a pump and dump.
What you're saying is the sequence of events was a pump and then a dump. But the definition of a pump and dump is something else.
No.
A pump and dump is literally you pump it up.
Again, it did a SPAC during
malicious, illegal activity.
This is malicious.
This is just
it
a
is
meme
illegal.
Coin. The difference.
Hang on, JC. There's different eras here. This is a pump and dump. This is a scam. Everything he's done is a scam. This is a scam.
It's a meme coin.
It's a scam that was green lighted by the SEC.
It's a publicly traded meme coin.
It's a scam.
There's no
Here's the point of the scam. The scam.
It's not a scam. It's a meme coin. It's a community.
JC, let me finish. Let me finish. Okay, it is different than Pepe. Pepe's not considered a fucking security because Gensler can't decide, or the SEC can't decide. Meanwhile, Gensler and the SEC greenlit this thing with an SEC approval, knowing who they were approving. And the gaslighting continues. He owns 60% of this stock and is suing the whatever idiots that he put in charge to perpetrate this scam. The people that he backed off from saying, I'm not running this company.
Let me ask you this.
Now he's suing them.
You think this is the last publicly traded meme coin?
That's not the question. That's not the question. He asked a simple question. Is this a pump and dump? It's an absolute pump and dump. And it was greenlit by the SEC. That's my big problem with this. You can't say one thing's a security, greenlight it when we know the person behind the security is a scammer, and then call things scams without knowing anything about them. So again, this is just bad behavior. Greenlit by the SEC. The shame about this is when we look back at this in 10, 15 years, this will be a funny story, just like GameStop and AMC, where there was all story, no math. And the sad thing about this story is the SEC, just like they allowed Sam to come to the United States and set up, they had him cornered in Hong Kong. The SEC and the politicians, however it happened, they greenlit it. And Gensler, with all his yabbering, greenlit this thing, let it go public. And now Trump's gaslighting people with Bibles, suing the founders of this thing or the people he put in charge of this thing because he doesn't own enough. He owns 60% of this. So I think it's one of the most fascinating pump and dumps of our time because we all knew it was happening. You're calling it a meme coin now to like...
I'm not calling it a meme coin. It is a meme coin.
No, I agree it is, but it didn't need to be. If it was just going to be a meme coin, Gensler could have said, go meme it. Go meme it. I'm not greenlighting it. I'm not letting institutions do this. But anyways, it's just a horrific moment in financial history that was unnecessary. Because you're right, JC. It should have been Pepe. It should have been DJT Orange Coin, and everybody would have been happy.
I just put up. Throw up the chart I just put up of DJT. This tells all. This is the story that you need to know. You're overthinking it, Howard. Look at this chart. This is anything you need to know. It's a chart of the DJT overlaid with the Dogecoin. You have the bellwether blue chip memes coin overlaid with what you say is not a publicly traded meme coin, which I'm literally telling you it is. And the market agrees with me, by the way, Howard.
No, the market agrees with you. But what I'm saying is one is traded on Coinbase being sued by the SEC. The other is blessed by the SEC trading on Schwab. And I'm saying if they are the same, then treat them the same.
Perlman,
And
how am I
that's
doing?
my problem with
you think
the
I'm
whole...
close? You think I'm close, Perlman?
I
You're
had
not
no
close.
idea when I put this topic in the hopper for today. I had no idea that we would have such a debate. I really have no idea what to think. I love the correlation here. And I think that what we're really pointing out, we have the thesis, antithesis, and I'm going to present the synthesis. The upshot here is that meme coins and pump and dumps are two sides of the same coin, that there's a similarity, an inherent similarity between the two.
No.
All I'm saying is one was blessed by the SEC.
By definition can't be a pump and dump because it's a community of like-minded individuals. Whether you like that community or not, one loves a frog, one loves the Trump, another one loves a dog. It's a community that believe in something and will it
you're
into
wrong.
being.
The community that believed in Dogecoin all got to buy it at the same time. The community that bought DJT bought it 2 weeks ago because they heard about it on Fox.
Right.
And paid $65, not 1 cent for it. There's a huge difference. That's the difference.
Okay, let's move on. I got one last topic for today that I'd like to go into. I'd like to talk to everybody. It's a health thing. It's really, really important. So we're getting all of this data coming out. Every study, every meta study that we see, that depression is on the rise, that people are getting sicker. I saw one yesterday where kids are missing more days of school. We just dropped, there's this giant global happiness study that's done every year. The US just dropped out of the top 20 for the first time ever in that study. This study right here, this is some data from a study by Blanche Flower at Dartmouth looking at happiness and levels of depression in all ages and both genders. And we're seeing this trail, especially in younger females and younger males, that were really falling off the table. And here's my comment about this. And I'd love to hear what you guys have to say, but here's my comment. The mean, these studies are looking at tens of thousands and hundreds of thousands of people around the globe. And is there a trend towards worsening mental health globally? Yes, there is. But what I'm here to say today is that the mean, the average of all of these that we see in charts like this, the mean is really meaningless. And the reason for that is because you watching this right now and my partners in crime up here presenting today and on this podcast and myself, we are not mean. We are not part of a mean. We are all individuals. We are all N of one. So we all have the capacity to combat these trends personally in our own lives. So we don't have to we see this happening and we go, oh my God, what are we going to do? It's so terrible. What we can do is we can just behave in ways that promote our own personal health and ignore really, or combat, or be subversive to, or be rebellious to this type of data and the mean presentation. So this is really this is a subversive argument I'm making. This is an anti-learned helplessness argument that I'm making. So if you're out there and you're looking at this data, you see it all the time. It's headlines after headlines. If you're seeing this data, you just think to yourself, hey, I'm not part of this study. I'm just an individual. I can just go out. I can get outside. I can move my body. I can eat healthy foods. I can get with people that I love hanging out with, like you guys, and just live my life as an individual and of one.
Yeah, the difference is, it's a great point. It is true. Here's the thing. We all have kids. We all have to live with these things coming at our kids, right? From Go-Gurt. I was this comic who was talking about it. Of course, we're anxious. We had Go-Gurt, and then we had fucking the phone thrown on us, and then TikTok, and then this and that, and like really funny stuff within this. But in the end, I got 2 kids who struggle with this stuff, and a lot of it is based on social media. A lot of it's based on the iPhone. It's not in their control that this technology was created. What's in their control and what's in our parents' control is trying to help them cope or manage this stuff. in a world that it's almost unmanageable. So the question is, what do you do knowing that there are all these inputs out there? It's a tough one. I think, for us, it's living the best life that we can live, right? And leading by example, and talking to our kids. But I see it. Like, I don't know what the mean is. I think those charts do, based on my kids talking to me, the anxiety levels are very high. And the data on the drugs is very high. These kids, but yeah, I'm with you. We're an N of one. We're all in control of this. You got to break these habits, right? It's not information. The information overload's only going to get worse. The filter failures matter. Your kids need filters.
A good one, Perlman, you'll appreciate this. I saw some videos recently. There was some guy walking around Miami, interviewing older folks, all in their 80s and 90s, asking them the exact same questions. And it's like, what do you, regret the most? What was a good lesson you learned? Like stuff like that. It was all the same thing. It was like, money doesn't matter. Materials don't matter. What matters is your health, relationships, your friends and family. That's the only thing that matters. Experiences. Like literally, it was hilarious because they all said the exact same thing.
Those are the universal truths. And we have this society, we live in this society where those are not the priorities, where the priorities are, how you look and what you're wearing and how much money you have. And it's a false truth. It's all a false truth. JC, you have a special perspective because you have 3 youngins in the house, right? You have 3 kids that are under 3 that you are now just at the beginning of raising. They are, mobile phone native. They were born after the invention of the mobile phone. And so do you have any thoughts about like what your plans are for how you're going to raise them?
Yeah, I mean, you already see it. Like we have the option to put a cartoon on an iPad or something like that and, at a dinner table and stuff, but we've trained them, not to. Like we'll give them like little cars and stuff, like when we go to like a restaurant, but we're not putting a screen in front of them. We try to limit the TV time, when we can. More music, right? That's something that I try to put a lot more music on. And the kids love it and they dance and stuff like that, so those are like little things that, before we get to the phone situation, we're nowhere near that, fortunately. But,
here's the good thing, and I'll end it here, is that I'm living proof. And again, I have my own bad habits, but most bad habits can be broken in 5 to 10 days, whether it's an app on your phone. And kids are getting good at deleting apps. The question is not just killing the bad habit or stopping the bad habit in 5 to 10 days, because 90% of bad habits, especially non-drug related ones, maybe sugar's a drug, can at least be stemmed in 5 to 10 days. The withdrawal is the same, but you can kill things, whether it's taking Twitter off your phone or getting off carbs.
Sugar's got to be a
lower
drug,
carbs,
right, Roman? Sugar a drug? Yeah.
We are living in an addiction culture. We have sugar addiction, mobile phone addiction, social media addiction, nicotine addiction, gambling addiction, and accessibility is the gasoline.
Accessibility,
right? Everything's
to sugar
so accessible
is the
now.
biggest drug. So if you can, and I can beat sugar, everybody can beat sugar in 5 to 10 days. So what I'm saying is, the good news is, you look at all these charts, but I'm telling you, man, most of these bad habits can be licked in 5 to 10 days. So it's, you got to find some people around you that help you lick these habits. And again, information overload, find some people that'll help you filter this stuff. But it's it's going to be a battle of everybody's life, these bad habits. And the good news is you can lick them. Yeah, that's where you're at. You can't make excuses. All right, boys. Happy away.
Adios,
Back
guys.
to work.
Cheers.